Let's go to Fox Business Network. Susan Lee, market watchers Scott Martin and Gary B. Smith. Susan, obviously they focused on the positive developments and ignored those that would be generally deemed more worrisome. What do you think?
Yeah, totally agree, because I would call this a trade optimism-fueled rally today. And the two overhangs on the markets and investor sentiment have been, the U.S.-China trade war and also the Federal Reserve hiking interest rates next year. The markets are anticipating maybe one, maybe none in terms of interest rate hikes next year. And this rhetoric obviously tempers the expectations of heightened trade tensions going into 2019.
Scott, what do you think?
Yeah, the interest rate hiking cycle is really interesting now, Neil. I mean, I'll tell you what, pun intended there. The prospects of a rate hike next week have already dropped considerably from where they were at the highs just even a couple weeks ago. Susan pointed out correctly. Next year, we're looking at one or maybe none. I mean, sports fans, we were talking about at least three next year. Just a couple weeks ago, maybe four. So the market is starting to get used to this change in the interest rate flow. And also, I think, no longer, Neil, necessarily getting tricked by some of these back and forths with China. I mean, you got Trump getting involved with the arrest in Canada with the CFO there. I mean, it's all these things that are going on with trade that I think the market is looking to say, hey, you know what? Until a real deal is done, we're not going to get too crazy about it.
You know, Gary B., it's always in the details and following up with the Chinese, but I'm wondering about with the market averages now at or close to positive or even on the year, only another 2.5 weeks or so to close the deal on an up year or look at potentially the worst in 10 years. Does that rattle you?
It does. You know, what rattles me is not so much the end of the day mark to market, which was up 150 today. It's the intraday move. You know, when we've had these big up days, Neil, it's troublesome. I think the market was up almost 450 points and dropped in the last 3 hours, almost 300 points. That's troublesome to me. I can't be as optimistic as I believe Scott is. I think looks like a lot of trouble on the horizon. You talk about the end of the year. I'm worried that a lot of the big portfolio managers will say, you know what, we're just going to cut our losses going into the holiday and really have a sell-off. I'm not saying that's going to happen, but I say at this point I'm more, I guess, bearish than I am bullish.
You know, Susan, one of the arguments that go in favor of the markets continuing what they did today is the fact that the rest of the world stinks by comparison, and that people who are nervous about that keep their money and add more money in the United States.
Yeah, best word of the year, American exceptionalism, and that, of course, pertains to the market. So there's nowhere else to be but the U.S. And I would say, 2019, if you look ahead, we're not exactly expensive. We're trading at 15 times earnings. That's still below the 16 times that we've seen over the last 10 years or so. And yes, I know it's slowing growth and also a deflationary or falling price environment. But in that typical scenario, when you have higher rates and a falling price market, you go back to 1994, markets rally for another 2 years after that.
All right, guys, thank you all. We have some breaking news.